But I think the broad takeaway for investors from today is that PepsiCo is committed to bringing better focus to this company. I've covered this company a long time, and its primary competitors, Coca-Cola, Keurig Dr. Pepper, you can say Primo Water, Monster. How they differ from PepsiCo is they're much more focused, particularly on specific categories. But PepsiCo, with the urging of the activists, urging them on, is bringing more focus to this company. And what I mean is they're rationalizing a lot of the SKUs that really aren't contributing much. They're consolidating plants. They are bringing more rationality to the trade spending. So when I hear things like cutting price, that's tactical. That's just a way to move the needle a little bit with near-term sales. But I think the bigger picture is to bringing more focus to this enterprise, and I think that's what's behind a lot of the enthusiasm behind the share price today.
Right. I mean, investors are excited about its strategy as opposed to just kind of moving forward with the way it's always been. When it comes to those price cuts, though, I wonder if this is going to spark any kind of price war. Will other snack makers feel the pressure to also reduce prices, even if they've gone up quite a bit since the pandemic?
That's possible, Scarlett. In the case of Frito-Lay, though, they have such a dominant market share. They have like 60% of the market in the measured channels. And when you have that much of a share, you deserve a premium, particularly with PepsiCo's direct store delivery system. What that means is that they help their retailers much more than a lot of their competitors, and that is they actually go to the store. They're quick to respond to out of stocks. They help position the product. They create the end caps in the store. They do a lot more for the retailer than their competitors. And so that's how they are helped to get premium pricing. So yes, they're rolling back some prices. It's no secret that price increases have been up quite a bit since the pandemic. A lot of it's cost driven. And private label has encroached a little bit on PepsiCo's share. But to answer your question directly, they are the dominant player. I would not expect them to give back too much over time. And while their competitors may cut prices as well, I think retail would be alienating consumers if they push too hard on PepsiCo's price increases down the road.
I was just in the ShopRite in Belmar, New Jersey yesterday. Lots of private label stuff on the shelves. I mean, prominent shelf
space. And are you reaching for those?
I am in many cases. Ken, talk to us about Elliott Management. They've been in this company. They've owned this stock here, pushing for some change. How much of an impact are they having?
I think on the margin, there's an impact, Paul, maybe to the degree that PepsiCo is hastening its move to more focus. A lot of the things that it's been doing all along, and that is upgrading their portfolio with more functionality. This is some of the things we talked about in the past. They're bringing more protein to their mix, the Poppy prebiotic sodas. They're bringing, more fiber, the prebiotic sodas. They're bringing more protein by restaging muscle milk. So bringing more value to the beverages. So they've always been doing that. But to your question, Elliott is pushing them to do things like, okay, you can still do that, but also cut costs a little more aggressively. Maybe you don't need all these plants. Maybe you can consolidate some. Maybe there's some SKUs, some products that aren't selling well. You can roll those back. Be a little more nimble when it comes to getting rid of some products that aren't winners. Because at the end of the day, you have to grab as much shelf space at the retailer as possible. And when you have products on the shelf that aren't moving, you're not helping them, with their business. So be a little more aggressive with that. So it's helping. And I think that's a positive thing for shareholders.